John Gonzales to speak today with us on the next round or the most recent round of PPP funding. Maybe a little insight on what they're hearing up in DC, and we should have an excellent program. A little bit of housekeeping. You've noticed you are muted, which allows us to hear from a presenter, but we do have the chat feature still turned on. If you have a question, you can send it directly to me, Jim Johnson, using the chat feature, or send it to an additional staff like Allison McKee, Zalinda, Dana, or Kayleen, and they'll get it back over to us, and we'll have some chances for Q&A with John Gonzales later today. If you don't know who John is and don't remember him from back in the spring, John is the director of Southwest South Central Region, Congressional and Public Affairs for the U.S. Chamber. John, that's a lot of directions in that title. It is works with the U.S. Chamber since 2005 and covers 8 states. He helps lead the regional office's efforts to build and maintain relationships in the area and service to maintain legislative, political, and grassroots resources that are key to achieving the U.S. Chamber's public policy goals. John brings more than 25 years of experience with the federal government, including work with Senator Graham and Senator Hutchinson, I guess more specifically Senator Hutchinson's election campaign. He is on the board of directors for the North Texas Commission, the Oklahoma Chamber of Commerce Executives, and the North Texas District Export Council. He is a graduate of the University of Texas at Dallas. And more importantly, John, when we talked to him last, was a resident of the DFW area and now has made the smart decision to relocate to Central Texas. But prior to turning it over to John, I am going to be sharing a brief introduction video as well. So I am going to say that technology will work just fine. And here we go.
Stay-at-home orders have turned America's densest and most vibrant cities into virtual ghost towns.
More than 84 million Americans are now under state directives.
If you look at the map across the country, no corner of the nation is untouched.
More than 23,000 stores in the U.S. are
shortage of personal protective equipment. The masks, gowns, and gloves health workers need to stay safe while helping patients was so bad in the spring.
Wow, John, thank you so much for sharing that video with the U.S. Chamber of Commerce. We are thrilled to have you. And for those who joined us during the video, we're excited to have John Gonzales with the U.S. Chamber today with us. John, thanks for being here.
Thank you, Jim. Great to be with you. Thanks for the opportunity. Thanks for everything you do for the business community in Georgetown and being a partner with the U.S. Chamber. And thanks for showing that video, because our communications team in DC does an outstanding job, and that's one of the best. They put a video together like that every year for our State of American Business, and that's one of in the 15, almost 16 years I've been with the Chamber, that was probably one of the best videos I've ever put together. So appreciate you sharing that with everyone. Well, good morning, Happy New Year, great to be with you. Let's start with what seemed like an eternity, but the Christmas Eve, if you all remember, Christmas Eve, Congress passed the Phase 4, or we called it the Economic Aid Act, on Christmas Eve, that did 4 key things for programs for small businesses. And the president signed it on December 27th. So you can take advantage of those for key programs that were dedicated to small businesses. The new second draw of PPP, idle grants, live venue, shuttered venue operator grants, and then the employee retention tax credit. So I want to start with the employee retention tax credit because it was around in 2020. It didn't get a lot of attention as part of the CARES Act, mostly because it wasn't as accessible as the PPP. Excuse me. But if you could, if I can leave you with one thing today, is paying attention to this tax credit. So beginning on January 1st of this year, 2021, the employee retention tax credit, it's a refundable and advanceable tax credit of up to $14,000 per employee. So who can qualify? Generally, if you have fewer than 500 employees and you've experienced more than 20% decline in gross receipts in a quarter compared to the same quarter in 2019, meaning pre-pandemic, you can qualify for this tax credit. So specifically, it's $7,000 per employee for 2 quarters of 2021, the first quarter, which we're in right now, and the second quarter of this year. And that's why I wanted to bring it up first, because we're almost at the end of the month, and it's something that you're going to want to take a look at. So, so $14,000 per employee for both quarters of 2021. It's authorized in the law for the first quarter, of course, of 2021, and the second quarter, which it ends in June. Now, you may remember this tax credit from the original CARES Act back in the spring of 2020. It was a smaller credit at the time. I believe it was $5,000. And as a small business, you had to choose between taking a PPP loan or the employee tax credit. And to be honest with you, at the time, most people gravitated to the PPP because, frankly, it was a better deal, and then it was also that loan could turn into a grant. So in the new bill, Congress has removed the prohibition of taking that advantage of both. So you can. So now, if you've got a PPP in 2020, you can take advantage of the employee retention tax credit in 2021, and you may even be able to apply part of it looking back to your expenses in 2019. So it really is a brand new opportunity for a lot of small businesses, and frankly, more generous opportunity than what was originally included in the CARES Act, 5,000 versus 5. So now, if you, how do you file for this credit? It's a little bit different than how you file for tax credits on, say, business expenditures. And that's what makes it even more attractive. So most of us think about tax credits, and if we think about it, okay, well, it's April 15th, I'm going to do my taxes, and I can take advantage of some tax credits then. Well, this tax credit that's applied against the employer's remit for withholding for the typical payroll tax withholding, which is obviously much more frequently, and you know that as a small business owner. It's also a refundable credit, meaning that if your expenses, your eligible credit exceeds your level of taxes, the IRS sends you a check for the difference between your taxes paid or what you would have paid and what what you're eligible for the tax credit, and importantly, more importantly, you can even apply at the IRS to receive an advance on this tax credit to help with cash flow issues if you had, and also it's an advanceable tax credit. So really it's a great opportunity for small businesses, particularly those with 500 or fewer. So if that's you, this is a great thing to talk to your tax accountant, your bookkeeper about, to understand how your employee retention tax credit can offset some of your wage expenses for the first 6 months of 2021. Okay.
John,
Yes.
John, can I ask a quick question on that? Before you move on to the second draw,
Yeah.
One of the questions we've heard from people is it's identified as the employee retention tax credit, and you go over the qualifications of 20% decline. Is there any qualification that is directly tied to total employees or any reduction in employees, or are they using that term employee retention tax credit because it's based on current employees? I hope the question I'm trying to paraphrase comes through correctly.
Yeah, exactly. So what you're starting this year with, the number of employees you began 2021 with. So if you look back, it is available for 2020, but it's a lesser amount. So you may want to talk to your tax accountant and make sure that your benefit is more is greater now than it was, and the amount is more. So but you may have had more employees, so you just got to figure out, can I get that 5,000 and live with that, or should I start now and get the 14,000 per employee credit? I hope that answers.
I'm trying to paraphrase a question, so I'm going to say I hope I did it well, John. And again, for those who are just joining in, if you have any questions while we go through this presentation, feel free to use the chat feature and send it over to me directly, and we'll get those questions over to John. John, sorry, carry on with your presentation.
Oh, no problem. That's an excellent question. Okay, so next up is the second draw of PPP loans, which is a forgivable loan up to $2 million. It has all the similar features as the original PPP, but it's a bit more targeted to those small businesses who were hit the hardest and who've exhausted, and that may have also exhausted their original PPP loan last year, which if you received, you had to have exhausted it by now. The exceptions for the second draw are 300 or fewer employees. That's down from 500 under the original program. You also have to meet a revenue reduction test. So in the second draw, but under the original PPP program, you might remember it was simply that your business was being harmed economically because of the pandemic. Here on second draw, you have to demonstrate that you've had a reduction in gross receipts in a quarter in 2020 of 25% or greater relative to the same quarter in 2019. So if your business was off, say 5%, you won't qualify for a second draw PPP, even though you may have qualified and received a first round PPP. Second draw, you would not. Importantly, like I mentioned, you have to have exhausted your original PPP loan in order to get the second draw. That doesn't mean you have to have completed the forgiveness process. Some of your businesses may be still in that process of waiting for forgiveness of that PPP loan. As long as you've exhausted the funds, you're eligible for a second draw. Another point to make here is this law reopens the original PPP loan since it was shut down in September, if you recall, of last year. And so it wasn't issuing any new loans. I can't remember the exact date, but it was September, sometime in September. So they've reopened the original for new loans to small businesses that meet the original qualifications that have never received a original PPP loan. So if you have never received that loan last year, you have the opportunity to go to your lender and apply for an original PPP loan. And so that you may want to consider that. Also, the SBA has great tools now that they've developed. They have this lender match program. I believe you can find that at the SBA .gov website. And so the lender match program can help businesses find an approved PPP lender if you didn't have one, or you need to look for one for an original loan. So if you received a PPP loan and you exhausted it and you meet the qualifications that we just talked about, the revenue reduction of the revenue reduction percentage and the 300 or less employees, and you can go to your lender and fill out that application. So it's something to think about if you never received an original loan. So for the second draw, you might get, on the second draw, you may not get as much money because they have caps, a little bit different. Their caps are a little bit different from, I think they're 2 million, but it's a great opportunity for those businesses who have, again, all their original PPP funds are looking for, that need additional support on that second draw. So mostly, again, the first PPP, the rules are the same that they were in the spring of 2020. I think I mentioned that. One significant change that's positive for business, which I think we all know about, but the single most important is that the taxability. If you recall in that bill, the taxability of those loans, they were taxable, and Congress changed that. So they are no longer, those loans are no longer taxable. So Congress clarified that in this last, that phase 4 bill, it's not taxable. In addition to that, though, your expenses that you paid for your PPP loan remain deductible as ordinary business expenses, just like it would, like you would to deduct expenses if you use your revenue to pay for it. So, so there are no tax consequences for receiving your PPP loan. So that, thank you, Congress, and a lot of chambers who spoke out against that. This is a significant advantage for small businesses. And the other change to the loan is the PPP loan is the list of eligible expenses for which you can use your loan. That has been expanded. Now, now it includes the expenses that small businesses have made to comply with public health measures. For example, if you installed plexiglass at your place of business, or built a drive-through window, or created partitions to comply with public health recommendations, all those expenses are forgivable as PPP expenditures.
John,
yes.
One of the questions that came in, and I think that I wanted to interrupt because I think it kind of ties into there, is that some businesses didn't get allowed all, I'm trying to read this right, deemed the partner income wasn't allowed, nor was health insurance on the first PPP. So similar to what you're saying, certain expenditures weren't allowed. Banks said, hey, you can only pull out this much, not the other things you're talking about. Right. Can they get a second draw on the first loan? And then that still falls on the eligibility of the first PPP loan. Gary Brown, I think this is your question. I'll ask you to unmute Gary, you've been requested to unmute if you feel like I'm trying to articulate your question and see if that was what you're trying to get across. Gary, welcome to the show.
Thank you. That was correct. We saw a number of clients that were with some of the big banks that the banks amended the allowed amounts, which would include owner and the healthcare, and said the only thing they were going to give a loan on was the W-2 income. So as a consequence, based on the later rules, the partner K1 was allowed as well as healthcare, and there were smaller banks gave it to them, but the big ones didn't. So by definition, those big banks shorted the amount of loan that some of the businesses should have had that were their clients.
Yep.
Thank you, Gary. I'm going to mute you and put you off the spotlight. John, go ahead.
That is correct. And depending on what part of the country or what state you were in, it all could have been different. So on the second draw, my understanding on the second draw PPP loan, they expanded all those expenses that may have not been available in the original PPP. So those specific ones you asked about, I believe are now can be added to that loan. But I'll definitely have to let you know, get back to you on that. But I don't have a list of all the additional allowances pulled up right here for you, but I can get that because those were all specifically added to the law. So they had to be included on second draw.
Thank you, John.
So, and I can follow up with you, Jim, on that as well. So, and so the same is true if you have, and this is second draw, if you have essential supplier goods like perishable items that you ordered for your business, and they're essential to your operation, those can count as eligible expenses. That's another example of eligible expenses for the second draw. So I don't have the information on exactly what he was asking for, but I do believe that is extended to the to healthcare and other things that he mentioned. And then remember again, forgiveness is you're eligible for forgiveness of that loan. The one important caveat, however, is that that there is still a 60-40 rule. That 60-40 rule remains in effect. So that if you recall the 60-40 rule that says 60% of your expenses of your total amount of the loan forgiveness has to be for payroll expenses related to your employees. So you can increase your loan favorability because of these other eligible expenses, but still 60% of your PPP loan must go towards paying your employees. I think probably the last thing I have on this second draw here, Jim, is the legislation changed the rule to allow, I think you recall this, 501c6s, nonprofit organizations, are now eligible for PPP. I know we're all happy about that. That was a huge push from chambers all over the country. One of our key issues, and it finally got added to this bill. So if you're a local chamber of commerce, if you're a direct marketing organization, a travel and tourism association, you now qualify for the PPP program if you're a 501c6 organization. Now there's tons of those other organizations weren't so lucky. If you were a C7, 8, 9, 10, et cetera, it still is 19 C19 and 501c3s, of course, nonprofit orgs, and then now C6s. So that was a huge difference in this new legislation. So just briefly on idle grants and live venue grants, which is part of that second screen.
I think it's pulled up. I
Yeah,
just
okay,
switched
good.
it up. Cool.
Okay, great. Yeah. So the new info on idle grants and live venue grants or shuttered grants. You may remember the idle grants in the first bill last year. That's the economic injury disaster loan. Typically, that's a typical loan program operated by SBA, but it has been reopened and it's taking new loans. And in addition, there were, if you recall those targeted grants, you could get a grant up to $10,000 for a small business. Well, a lot of people applied and maybe got 2,000 or 3,000, maybe 4 if they're lucky. Maybe if they got the full 10, then you're fine. But if you were short any, now you can apply, reapply for that idle grant, and you can get the difference. So if you only got 3 or 4,000, now you can reapply, and they'll make you whole again to that $10,000 grant, so you can get the additional 5 or 6,000 or 7,000, whatever you didn't get
Wow.
last
So John,
year.
is there any, so that's real, any employee issues like total employee counts or anything like that to get to that full 10? Because I'm thinking, the organization got $6,000 because it was based on FTEs. Do they just automatically reapply and get the difference? Is that what you're?
Yes,
Wow.
I believe that is the case, because at the time, they were, even if you have less employees now, at the time, that's how many employees you have. So they should have given you 10, but they started quickly running out of money.
Okay.
So so yes, you can go back and ask for your additional 4 if you want to.
Perfect. Thank you.
Yeah.
John, that's a great point.
Yeah. So also, just real quick, Congress they re-upped a little bit with a twist on giving the priority. So small businesses are a priority, more of a priority, targeted priority in this next round of all these loans. So they have, if you're looking for, if your business happens to be located in an area that's more depressed, there's a new market tax credits map that you can Google, and your loan will be processed before anybody else's. But you still have to kind of meet those same requirements, experience a 30% reduction in gross receipts. But if you happen to be in one of those areas, it's something to consider, and they will expedite those loans. SBA will, if you meet those qualifications. Now on the great. Where are we here? Okay, so it's a great opportunity to go and take a look at what SBA has got. They've got a lot more information. Their process is a lot smoother than it was back then. They've been doing a really, really great job under a lot of pressure. So we appreciate them. And then finally, the other program that the bill included, I know is important to a lot of areas, especially the Austin, Central Texas area. It was a bill for the grant. The bill included grants for live venue operators. That means if you're a live event business, theatrical producer, live performing arts organization, museum, independent motion picture theater, or talent representative, then you are going to want to pay attention to that live venue grant. Now, in a lot of most of the cases though, on any of those, you have to sell tickets. So Jim, you sitting in your boardroom playing the guitar doesn't qualify for one of these grants. And I doubt you could sell tickets, but if you could, I just don't think it would work out. But nonetheless, if you're selling tickets, if the majority of your operation survives by ticket sales, you're more than likely going to qualify. And if you had to have suffered though a 45% decrease in gross receipts, and the maximum amount you can get a grant for is $10 million. I know that you'd like to see that, Jim, but I'm afraid they'd probably deny you.
John, there was way too many people smiling when you made fun of me on that. I was watching people's images.
I wasn't making fun.
No, but John, somebody did have a question on that, specific to that gross earned revenue in 2019. Does that mean only box office or overall? So let's say you sell tickets at a theater, but you also like concessions,
right,
or you do a big gala that, goes to the arts,
Yeah.
Can you clarify that point?
Yes, no, that is all included. As long as you meet that threshold of 45% decrease in gross receipts. So gross receipts, not just the sale of your tickets, but everything you would make for a show. So live venue event location. Now you can't, for the most part, if you're a bar, but you have live music and occasionally you do that, you're probably not going to qualify. It has to be your primary business. And SBA has a great list. So the law was very specific on who could take advantage of these grants and who can't. The SBA has not, they don't have their application process up and running yet, but they will have it in the next week or two. So you do want to go to SBA and go to their website, familiarize yourself with everything that's included in the law. They have it posted up there, but you need to create a SAM account. And to be honest with you, I've never even heard of a SAM account until late last year that SBA had what SAM accounts were, but they're for the live menu grants, and those applications are going to be ready to go probably within the next 2 weeks, middle of February. So if you think you qualify, go to the SBA website. You gotta create a SAM account with them, and all that information is there. And then you'll be ready to, when that application process opens, then you'll be ready to submit your application immediately. So if that's something that you that's you, I would do that as soon as we get done with this call.
John, 2 clarifying questions on this. Can you clarify the rule that an artist has to be paid versus just a decrease on gross receipts?
Yes, if an art, even if you're an independent artist and you can show that you're a 45% decrease from compared to 2019, you should be eligible.
Okay. What about, and so the second clarifying question, and I think I know the answer, but I'm going to put you on the spot, is in Georgetown, there are quite a few wedding venues that you could, or some sort of live venue, but they're more for weddings. And it sounds like they're possibly ineligible, but I just wanted to.
They may be eligible. That's an outstanding question, because SBA hosted a webinar specifically on live venue grants last week, I believe, and it's still changing. But that was one of the questions was, we're just a special event operator. And the person that was speaking wasn't 100% sure, but she was almost sure that it would qualify.
Well, that's good to know. We have quite a few of those in Georgetown that would love to take advantage of that.
Yeah.
Clarifying question. Sometimes theaters, museums, or nonprofit organizations, does that impact their eligibility? So, they're a C3 running a theater or a museum. Does that, or whatever the classification, would you feel like, have you heard any disqualification as a nonprofit for those?
No, I have not. And so this is, this is different from PPP.
Right.
So this is SBA, and it's a new grant program. So I don't believe it matters what your tax status is, whether if you were a nonprofit, whatever, a 501c6 or 3. Yeah, shouldn't matter.
Next question, last question on that section, I think that I have is, when PPPs first came out and some of these SBA, EIDL grants and stuff, there was a limit on the available of funds. And so there was a mad dash to these things. And when you start talking about live venues, you think of some of these huge areas that are, could pull that grant of $10 million pretty quickly because they're the Austin Convention Center, for example, just using an example.
Right.
Have you heard anything about limitations of available of funds so that there's a mad dash to the SBA and within an hour, the blah millions of dollars or billions or trillions is gone? Have you heard anything about that?
There is a limit. I don't recall wait, I might have it here. Congress put in, it was HR 133 and economic, it was $15 billion.
It sounds like a lot of money,
yeah. But if everybody qualifies for 10 million,
it goes quick.
That it would go quicker. And that's, that's a great segment right into this next round and what we might expect, what might happen. And some of those things will need to be in new legislation this year from the Biden administration and the new Congress to get, I guess we would call it phase 5. I don't know. Because as soon as those people start taking advantage of this assistance, it could do it. The same thing could easily happen as we did last year, where those funds start running out.
I think that's a great segue, John. I think we've covered some of the new things and give you an opportunity. Y'all are our colleague up in DC. We might not be governed by you guys, but we use the U.S. Chamber as a great resource for what's going on in the business community. So, and you have 25 plus years of doing this, plus. So what are y'all hearing about phase 5? And, what can you share with the group today? And then I feel like we've been gathering questions, but again, if you have any questions and you want me to ask John, just put them in the chat and I'll get those as we can. But John, what are y'all hearing up in DC?
I just heard last night that SBA is having experienced some technical issues on some of these loans. If somebody has a question about a technical issue, that they got some response back that says, oh, something's bogus. But they're well aware of these technical issues. Apparently, some people had applied and it said, you're not eligible since you received. Since you didn't receive I don't know, they got something messed up, but they're working on the problem. And so be patient, and they're aware of the technical glitch in case you have applied and experienced some difficulty, they're aware of it. So as far as new legislation, another COVID relief package, it's going to take some time. I mean, it's really, really hard to predict. We're thinking maybe March. but you know, the Biden administration has already indicated another $1.9 trillion package. But truly the timing is anybody's guess. What we would like to see is, again, more targeted assistance. Two of the major things that weren't included in last year's bill that we'd like to see in this new bill would be additional support for state and local governments, which is probably going to be top priority there. And then liability protection for businesses and schools. Those are the two things that we'd like to include in this new package. But again, the timing. There's a lot of other things going on there that are making things a little bit more difficult to start working on this. But March, April timeframe is what we're hoping, and it's probably the earliest would be March. But we're working on it, and thanks for your support and all the chambers that help us. And we couldn't do this without you. Your members of Congress they hear from us all the time, and they need to hear from you all the time. And so together we'll be able to make this happen. So Jim, thanks again. Happy to hang around and take more questions or whatever you need.
Two questions, and I haven't seen this. You know, the SBA, you started off with a little bit of technical difficulties that they've had, and you know that department's been thrown into a lot of stuff that they probably weren't expecting 12 months ago, as many of our businesses are. Have you, with the new administration, heard of any, I guess, who's the authority with that, where that's going to come from, and you know who's been tasked with leading the SBA going forward, and maybe you know, just curious if y'all have heard of anything of that in DC.
Yeah, the Biden administration nominated, I can't recall her name right off the top of my head, but we were supportive of her nomination. I just remember she is small business person.
Isabel Guz. I just pulled up Isabel Guzman, I think. Okay.
Yeah, that's her. And yes, so she's going to be leading the SBA.
Okay, wonderful. One of our members came in a little bit late, but we still love them. But I don't think we covered this earlier. When we talk about the 25% reduction for the second round of PPP funding, how, I guess he said, how hard is that? I mean, like, are they looking for an exact 25% number? You know, what can you speak about calculations of the 25%? I think is the best terminology I could use. And again, if you have questions, send them directly to me. We've got a couple more minutes. But if you have any questions as we close out here, sorry, John.
That can always be tricky, because remember, you have to do the same, you have to compare the same quarter of 2019. This is for second draw, PPP, the same quarter. So I guess you would want to maybe pick your worst quarter of 2019 or maybe your best quarter, but it has to be the same quarter. It can't be a different quarter. So look at your 4 quarters, and it has to be a 25% reduction compared to that quarter in 2019. And looking at that same quarter in 2020. And if it's a 25% reduction in overall gross revenue, then you should qualify.
And the amount eligible for that second round, is that still calculated like the first round? How are they calculating that second pool of funds? Is it,
right,
you know?
Yeah, it depends on the amount you're requesting. So if you're at 150,000 or less, not only is it easier to qualify, but it's also easier. There's a 1-page application when you want to apply for a loan for it to be forgiven. If it's less than 150,000, there's a 1-page application for forgiveness. So that they're trying to make it as easy as possible. But yeah, again, those amounts, there's a whatever the cap is that I mentioned. I think it's 2 million.
Right.
That's still in place. Everything, you know, I don't know if you'll get exactly what you asked, the amount you asked for, but it's going to be awfully close.
Wonderful. Thank you, John. I don't see any more questions. John, thank you so much for taking time to visit with the Georgetown Chamber of Commerce. We appreciate your insight, and thank you for the U.S. Chamber for all they're doing in D.C. and across the country to advocate for businesses. I think when you think about chambers of commerce, sometimes we think about the ribbon cuttings, but what the U.S. Chamber does and what our Georgetown Chamber truly to be advocates for free enterprise is what our core values come down to and why we were established many, many moons ago. John, thanks so much for all you do. Thank you for your time. Chamber people on the call, thank you so much for your time and participating in a Chamber Power Hour. Again, these are designed to be content that is relevant and timely, and we do hope as more phase 5. I can't believe, John, when we have phase 5 come around in the spring, we'll bring you back in, and who knows what else might be targeted in there or a benefit to the businesses in Georgetown. Everybody have a wonderful, safe day. Enjoy the pretty weather. A little bit cooler outside today. Have a wonderful, blessed day. Enjoy your time. Thank you, guys.
Thanks, Jim.